All right, so now we should be ready to essentially apply all of that theoretical concepts that we've gone through from every lesson that you have now watched so far in this technical analysis module, and we can start to slowly apply that to the charts on these realistic price action examples. So obviously the main way we're going to be concentrating on using supply and demand zones is by looking at those ones that lead to breaks of structure. So we're just going to keep it super simple, take one time frame at a time. Again, as always, starting from our top time frame and then slowly working our way down. So this was the range that we were looking at, but what I'm actually going to do is just quickly go through back a little bit of price action just to show you, again, how this literally just applies to any time frame you are looking at. So if we look at this big weekly break of structure here to the downside, as we can see, right, I talked about the decisional and the extreme, right? Obviously somewhere up here is that extreme weekly supply zone, which price has come up nowhere near since it was created back up here in around May 2014. But then what do we have down here? We had this buy before the sell, that pivot created demand. So if I draw this on, right, so you can draw it from the bullish candle, right, all the way up to the wick. So I'll just zoom straight in so you can see what I'm doing, right? This bullish candle to the wick there, and I'm just putting my weekly template, right? And that is essentially your pivot created supply that led to the break of this major weekly low here. And then we can drag that across and we can see that's where price spiked up. Right, it takes a little while to play out. So a little while on the weekly chart, right, just a few candles. But of course, if you're sitting through this on live chart, that's from the 22nd of January until about towards the end of April before that price actually starts to move. So this is another thing you're going to have to bear in mind when using multi-time frame analysis. When in the live market, price can enter a weekly zone, but you can be trading day to day for months at a time before that zone actually starts to play out. Right, you have to kind of think of that cruise liner in the ocean trying to turn around. If you're staring at the charts, every minute, day by day, it's going to take a hell of a long time. And sometimes you can forget where we are within the high time frames. And actually, this is what's happening. It's generating liquidity. It's taking time whilst those orders are exchanging hands before eventually that weekly supply then takes control. And then you end up seeing that weekly trend change, right? Where we then get that weekly break of structure there to the downside. And then the weekly chart switches bearish. Again, right when we're back down here, when the weekly chart was bearish from this huge run back down in 2014, and then what happened? Price took the low, it closed below the low, which means that we then had a high, weekly being the highest high up here, and we got that break of structure there to the upside, right? So then when price trickled down for almost 2 years, what then happened? It came down to the extreme. So we draw this on, right? So we have essentially this entire range, right? You can take the whole range, or you can start to refine it a little bit, because really what this range will be is more like a monthly pivot or a monthly candle. So we want to be a little bit more accurate. We can kind of see, if you look at the price action, what happened? Well, price came up, right? It's come back down, mitigated any demand within there. It's had a minor break of that high there. It's come back down and it's mitigated any of the demand in here, and then the move went. So really, this is where we can then refine that range to kind of where that last pivot was of where that kind of last sell before the buy came in, where that demand, that true weekly demand stepped in for price to then lead on to causing that break of structure to the upside and causing that weekly trend change. So you can see, the larger the zone that you take, you will see price react to it, but it can be quite a while before we actually get that large shift in price action, right? So this is going to you're going to have to, it's going to be different for every trader. I've kind of tried to speak about this a little bit before when we've been going through the theory videos, that there are multiple ways in which you can draw your supply and demand, and it's just going to depend on each individual trader. So what I mean by that is we've taken quite a large pivot here, right? The large sell before the buy, and that's a completely valid demand zone, but it's a large zone, right? If I just measure that in pips, that's 300 and roughly 330 pip range to play in within. So the moment we come down in here, right, and we start to react, you can start to look for longs, and you can trade these reactions, because on the weekly chart that only looks like a tiny little move, but in reality, let's see, that moved, what's that, 30 pips, 301. Yeah, 301 pips, that is. That's a 301 pip move, sorry. So that's quite a lot to trade from an intraday basis, right? If we can be entering in on the lower time frames, that's a decent move to be taken in. But then we have to realize that actually once you refine the zone to either the last sell before the buy, then that's kind of where that true move can happen. And that's where you can, increase your accuracy and your strike rate and your reward to risk ratio. So this is another little thing that we haven't spoken too much about, but if you refine your multiple candle pivot zone into just that one candle, the last sell before the buy, this is completely valid. So if I zoom in and I'll show you, right, to draw it like this. But however, another way you can kind of draw the zones, which is essentially you keep refining it to the next candle that is then engulfed. So you see in this case, if I refine it to this candle, the next candle then does close above it. So there's kind of not a super strict way in which you do it. You can count that as valid, so the last sell before the buy, or you can refine it to the next candle that is then engulfed, right? So technically, if you're being super strict, demand should be drawn from a bearish candle or a bearish range that then causes the bullish move. So in this case, you're drawing demand on a bullish candle before a bullish candle. So if you're being very strict and very, true to the true way demand and supply should be drawn, this may not be valid, but this is a very valid refinement in my opinion. I've tested this loads, it works more than well, just to keep refining that to the candle that then gets engulfed. Okay, so both are valid. It's up to you, just find what works for you in this case. So as we can see, price took this low here, so in fact it was actually bearish, right, because we took that high. So that's when we switched bullish, but then we switched bearish again. We came down to mitigate that demand, and then that led to another break of structure over here. So why not draw that on, right? And then that pretty much brings us to the range that we've been mainly concentrating on this whole time, right? But one thing, did you notice let's take this a little bit slower. When we had this pullback here, right, we're clearly in a weekly bullish trend, right? We created that high, we had a nice shallow pullback, right, with all of that momentum. How likely are we to pull back to the EQ? Potentially not so likely after that first initial trend change, and we mitigated that last area of demand, right? We've seen that big injection of bullish capital, that demand stepping in, shallow pullback, and then we get another break of structure, giving us this weekly high and this weekly low. When we get the weekly break of structure, right, what do we expect? We expect the weekly pullback. How can we anticipate the weekly pullback? We get a weekly change of character where we take the high and then we take the low, and then we get that daily trend change which initiates the weekly pullback, right? What's another thing we can use to anticipate where this weekly pullback is likely to occur? Supply and demand zones, right? So obviously for a bearish pullback in a bullish trend, we would expect price to come and mitigate supply, right? So if we just rein this in a little bit, we can focus on this fresh weekly supply zone that led to what? Led to that break of structure. So if we draw on our weekly zone, you can literally take the entire range, so from the lowest point to the highest point, and then draw that across. You can see as soon as price came in, you start to see that sensitivity in price action. You start to see some of that supply from this range start to be filled, right? But obviously price can go a little bit higher, and it ends up mitigating the EQ of that range. You see how it pretty much hits bang on the 50% of that entire range. That is what you will see happen often a lot with these zones, these range created zones, or even just one candle. You will see that price loves to hit the EQ before it kind of gets enough of those orders, mitigates 50% of the range, and then we see that move there. But how could we have also refined that range? Well, you could have refined it to more of the pivot, right? So you can see here, if I just do that now, so from that candle this high to that low, what do we have? Well, we have price come down, get the pen tool to work, there we go. Price comes down, right, it comes up, and then it comes down again, and then you get that last buy range, right, before the sell, and that can kind of be your pivot there. Or you can refine it a little bit more, and you want to take the last buy before the sell, which is also valid. Or like I was just saying, right, because the next candle fails to close below that wick, a lot of people can then refine it to that candle there, and that can be your most refined way, essentially, of refining that range down to that one candle, right? So that would be, I guess, your most refined sort of whole way. But then if you want to be a bit more fractal and refine that even further, what can you do? You can refine that to the wick, right? Because obviously this is a bearish candle, and like I was saying, right, technically supply should be a bullish candle before the sell, right? I still view this as valid. This definitely works. You'll find it from your testing it does as well. But then sometimes what you can do is, if you see that it's the only candle that is then engulfed, like we have here, was the bearish candle before, so it's two bearish candles, right? It doesn't make sense because it should be the buy before the sell. Then what you'll often find, not always, but what you'll often find when that happens is that you can then refine it to the wick, right? Do that fractal refinement, because on a lower time frame, this wick here will very likely have that bullish candle in this wick, right? That then gets engulfed, and then if you were to go and look at that wick on a lower time frame, that up move here will be a bullish candle followed by a bearish candle on the daily or the 4 hour, right? So on and so forth. So we're getting a little bit lost in the detail here, right? These are very, very extra kind of little refinements. They don't make a massive difference. This is kind of for you more advanced guys, or you guys kind of further on in your journey. It's not the be all and the end all. What really matters here is that you've refined this whole range, which is probably more likely to be a big monthly candle, right? And you just refine that down to either that last pivot, right, or that kind of last bullish bit before the sell, or you can refine it all the way down to that one candle, okay? Just to be a little bit more accurate. And then we spike into here, and then what can we expect, right? So now we expect that pullback, we get our change of character, and we can expect price to pull potentially back down into the discount. Now, what can we look for to help increase the probability that weekly high low may be in place when it's in the discount, and we can wait for what? That change of character. We get that minor bullish pullback, price comes down to form that minor low, and then we take the high, right? So what happened there is we had a minor low, took the high, that's a weekly change of character, which we know now was our daily bullish trend change. But how could we have anticipated ahead of time how far we were likely to pull back? Well, we can look at one, the most unrefined way would be to take this entire weekly range, right? So you can see here, as soon as price comes in, there's a bit of a reaction, but it's a massive, massive zone, right? It's more of a monthly candle. We want to refine that down. So what we can do is refine it to that last sell before the buy, right? And you see in this case, it gets engulfed. So that's kind of your really true way in which you should, technically draw your demand zones. Now you see here how I've included the wick of the bullish candle. You don't have to do this, but it's the way I do it. I would advise you do it, because what's really happened, right, is price has been selling, right? That weekly candle closes, but that doesn't stop. Price keeps going down in this candle here, and then the demand steps in, right? So that's why I always include the wick, because what can also happen, right, is if you only draw the weekly zone just on the bearish candle, what can sometimes happen is price didn't, in this case, or at least so far, price can come down, it can come a little bit lower than your zone, and it can react to the demand that's within that wick, and then price can go. So that's why I would always advise you do cover the wick in that case, okay? So, very simple terms, what's happened? Well, we started a bullish trend, right? Broke that high, we mitigated an old area of supply, so that's what you'll find, right? When, excuse me, when we were back all the way over here, price then led, when that supply came in, it led to the break of structure. If we were looking to trade the market back then and we see that pullback, right, we could anticipate that price may want to come up to that origin, that extreme supply zone that led to the break of structure down here, right, and then we could look for shorts, then continue that move. But of course, it doesn't have to do that. But that doesn't mean that this is now invalidated because the price then continued to trend to the downside. Nope, that supply will still be valid. It just means that we can use it at a later date, right? So then when we start to revisit those prices over here, we can then look left to see, okay, we have an unmitigated area of weekly supply. So unmitigated, essentially all that means is that it's fresh, price hasn't touched into it, right? So now what you'll find in a bullish market is that previous supply zones will just lead to pullbacks, right? So we can expect a decent bearish reaction from here, but market structure and expectational order flow is more important in terms of we expect this low to hold. So although this is a strong area of supply because it caused a break of structure, because we are still in a bullish trend now, it's just to initiate the pullback. We don't expect it to necessarily break this low, right? Purely just from a weekly market perspective, we expect this just to initiate the pullback and for demand to stay in control and for this to hold and for price to form a higher high. Now, of course, that doesn't have to happen. We could see this low go, but that's the blind assumption that we run with until proven otherwise, that demand is in control in a bullish market, okay? So that's one way you can draw the weekly demand zone. As you can see, that's what price eventually led to react to. But you could have also been looking, at the last, more of the decisional, right? This sell before the buy, or you could have refined that further, right, to the actual candle that gets engulfed, right? This, you can see this candle then gets engulfed, and that's absolutely valid. Make sure you include the wick in that as well, the next candle. And you can see here, right, there's reactions from here, and you can use this as tradable knowledge, but you have to understand that price could come lower like it ended up doing to mitigate the actual origin or the extreme. Or another way you could refine this single candle even further, right? Because remember when I said demand should really, technically it should be on a bearish candle before the bullish move. This is still valid for me, but if you're being super strict, it should be. So then what some people do is they will just do the fractal refinement instead. If I can get it to work, there we go, down to this wick. Why? Right? Why would they do that? Well, because on a lower time frame, that wick is going to have, at some point on one time frame, it's going to be a bearish candle that then gets engulfed, right? And then that's why we see this reaction here, but it's just a short-lived reaction in terms of the weekly chart, and we go a little bit lower because it wants to mitigate that extreme demand zone down here. So going to keep it simple for now and just leave that one drawn on. But I just want to show you, it's not always black and white. Sometimes in live market you can spot multiple zones. You can see, various ways in which you can refine it. But that's what we'll use multi-time frame analysis to help us do, right? You don't have to just be stuck on one time frame going, do I trade from this range? Do I take the one candle? Do I take the wick? Do I take the sell before the buy, right? You can be aware of all of it, so you understand what's happening when price starts to react to certain points in the market. But what we will do is we will drill down into the lower time frames and we will investigate what's within this big weekly zone, right? This big sell before the buy, and then we'll use those time frames to help refine it even further. But just purely from the weekly chart, we can just leave it that. We can leave it unrefined. We can leave it as a big zone like this, and we're just aware that all these 4 or 5 weeks when price is tapping into here, we can be aware at any point that weekly high or low is going to kick in. But we'll look within here to look for those lower time frame zones, right, to help us time that potential weekly high low and that potential weekly high run. So that's pretty much where we are at the moment with the weekly chart. So I'm going to leave that there for now, and we're going to dive down into the daily chart and see if we can see how price action reacted with all of that weekly price action. So obviously that was the weekly zone here. Let's quick scroll across. Now we had, see how as well you can refine this even further. So could we refine this weekly zone to a daily zone? Well, you could take this entire kind of sell before the buy, that whole pivot there, right? Or we can refine it to that doji there. I'd probably include the top wick, or you could refine it even further to actually the candle that then gets engulfed, and we can do something like that. And then if we drag it all the way across, let's see if price does actually come up to mitigate that. So as you can see, price then taps into that daily zone nested within the weekly zone, right? So price then reacts from daily supply nested within weekly supply, right? It's mitigated the EQ of the weekly range. Then what do we get? We get that daily change of character, right? When we break that minor daily low, which would most likely be what? Our 4-hour swing low, so our 4-hour bearish trend change. And then eventually we come down into this daily low and we get a break and close below that daily low to give us our daily bearish trend change, right? So the daily is now confirmed bearish, and that is where we got our weekly change of character. And now we can really start to anticipate that weekly pullback down and towards the discount of this bullish weekly leg, right? And then down into our area of weekly demand. But what do we have purely from a daily chart perspective to potentially anticipate where the daily chart may reverse from, or at least get a bullish reaction? Well, we have this pivot created demand, right? This sell before the buy that leads to the break of that weekly swing high. So we can draw that across as well. And what do we get? We get a very, very nice daily reaction, right? But what we have to understand is this whole time, it's just a decisional. Price can definitely come down to any of these areas of demand within the extreme and come down towards this weekly zone. So these are still tradable because, as you can see, we get really nice sustained daily move that, at least from an intraday perspective as well, we can take advantage of. But you have to manage in the expectations in the back of your head that potentially it's just a reaction point to then generate liquidity for price to then come lower, right? Because once this area of demand has been mitigated, remember, what does that mean? It means all of those buy orders, all of that demand sitting within here has now been filled. And that causes this move here, right? Whilst demand temporarily overpowers supply. But because we are still in a bearish market, because this is the daily swing high, price fails to close above it, right? So the daily has remained bearish, right? And then we come lower because we're in that bearish trend the entire time. Daily supply is in control. So when we come up here and we fail to close above, we grab that liquidity and we start coming down. We assume that this is a weak low. But what else? What has also happened from a demand perspective? Well, all of those orders have been filled. So now when price comes down, right, there's nothing stopping it because this has already caused that move away. So now there's just pretty much a vacuum for price to smash through. And that's why you see these big bearish candles for the most part, right? Because there's no demand until we get down to here. Because what do we have down here? All right, we have this inside bar, right? You can either take that whole, it's pretty messy price action, but you have this whole big sell before the buy candle, right? Which you can see if we get another reaction from, or you could refine that down to the inside bar. Right, still include the wick, or you could refine it to just the candle of the inside bar. There we go. Right, because remember, an inside bar is just a range on a lower time frame, and these are very good, candles to keep an eye out on. Now, you can use an indicator because, as you can see here, they're colored white for me. I'll put a link to that in the notes below the video. You can put those on your charts, and it can really help you just to spot them at a glance. So, again, this is an old area of demand. It's still fresh. And we just expect a reaction. We expect a pullback to initiate from there. We do not expect the daily to go on and make a higher high and have a trend change, right? Because we just expect the daily trend to continue until it doesn't, right? We don't try and second guess too much. So when price comes into this inside bar, that can help us to either manage any shorts we're in, right? Well, it doesn't really matter. It's just, we just use it as trading information, right? So you can either use it to manage any shorts you're in, to understand a pullback's about to kick in, or you can look to play those counter trend daily pullbacks, and you can look to potentially get in long here, but just managing your expectations that it's just a short-term pullback, a short-term live move, and we're likely to come lower because now the demand has been filled, the demand has been cleared. So now when price forms its lower high, it does what it needs to do, right? Now it can smash straight through because there's nothing stopping in its way until what? Until it encounters more demand to then initiate another bullish move, right? So from a daily chart perspective, what could we start to look at within this massive weekly zone to help refine us, right? Well, we do have this inside bar here, but you can kind of see it was already mitigated by this wick, so it's not the best zone. You can start to get a little bit more fractal, and you can look within the wick of that inside bar because that would still be fresh. So the wick of that inside bar is likely something on the 4-hour chart, and if I draw it across, you can see you just get a short-term pause. Now it pauses there for 3 days. So look, from a daily chart perspective, nothing happened. It looks like it instantly failed. But from an intraday perspective, right, we can use that as decent information. But ultimately, price came lower to do what? To mitigate this large candle here, right? Because remember what I was saying about the true areas of demand should be the sell before the buy. So if you drew this whole sell range, which is really what we've done with the weekly demand zone, right? And we just refine it on the daily down to the last sell before the buy, that is definitely valid, right? And if we draw this across, we haven't come down there yet, you may see a reaction. But for me personally, I don't view that as valid because when this zone was created, where we had the sell on the 2nd of November, and then it was engulfed by the buy on the 3rd of November, right? What happened the next day? Well, we had all of this demand created here, and I would be looking at the demand zone, but the very next day, price comes down, it fills all of those orders, it smashes straight through, right? So the minute for me I see the demand zone has been spiked through, that means demand has all been absorbed, right? It's failed, price has gone lower, and then the demand stepped in to go. So for me personally, I would not view that as a valid demand zone, and I would then evolve that to this candle here, right? This big doji here, and then this is the candle that gets engulfed. Now, there's 2 reasons why we may want to refine this daily zone to make it even smaller and why it would be valid. One, because it's obviously a massive zone, but 2, remember, it should really technically be the bearish candle before the buy. For me, this is still valid, but what you can then do is refine it to the wick just to make it a bit smaller, but also because within that wick, there will then be a bearish candle on a lower time frame that then led to that bullish break. And as you can see, price then came down into there, and then that's when we got what? That daily change of character, which was that 4-hour bullish trend change, and all of those signs start to then kick in, right? We come down towards the bottom of that strong weekly low that needs to hold. Right, we've mitigated the fractal daily wick. We've got a daily change of character, right? So the 4-hour switching bullish, and then this is when we come in to our daily. It's still bearish at this point, right? That's our daily strong lower high. It did cause a lower low. So when price comes back up, purely from a daily chart perspective, what do we expect at this point? We expect a daily lower high to form, right? We expect the strong high to hold, and we should expect this to come down and take out this low, right? So what could we look at that point is we could look at some daily supply zones, and we have this pivot buy to sell candle here, right? If I draw that on, and what happens? Price does pause there, right? Whilst that battle between demand and supply is occurring, right? It's battling with each other. It pauses there for 1, 2, 3, 4 days, right? But eventually price breaks up a bit higher. So this is where you can see that supply is starting to fail and demand is starting to step in, and eventually we do break up higher and we get that daily bearish, bullish trend change. Right, but it all led from kind of starting to use multi-time frame analysis now. That price shouldn't break this weekly low. The weekly's bullish. It's come down to pretty much the extreme daily nested within the weekly chart. We've got a daily change of character. The 4-hour is now bullish. Right, supply is starting to fail, and then we get that break of structure, and then the daily starts to change trend. Right, so at this point in time when price is here, we can be looking for shorts, and it would be pro daily trend, but we kind of have to use lower time frame confirmations that potentially know that reversal may be about to occur, right? So then at this point, right, if we just look at purely the daily chart, I mean, I've kind of missed some of the old price action. Let's have a quick look back up here, right? If we just jump back a bit, when price started to change down here, right, we got this daily break of structure, and then what do we have purely in terms of supply? Well, we kind of have this pivot created supply here. But how can we refine that a little bit more? You can refine it to the inside bar. That would be valid, right? And you can see the price reacts and we push down further. Then we get another break of structure. right? Price then pulls back. We have this pivot created supply here, right? Sometimes you have to include the wicks as well, and it's a little bit messy. Price will spike up a little bit higher, right, and mitigate something within here. But generally, you can see this is a whole area of supply that led to the break of structure. Price pulls back up into it. We expect that lower high to form. It tries to go down lower, but then it fails, right? So it pushes up a little bit higher. It fails to close above that daily high, so we do switch bearish. But what did it want to do? It wanted to come up to try and mitigate some higher area of supply. Then we came down lower, and then we took out this low here, right? So there is unmitigated areas of supply over here, right? This candle here and this candle up here. In fact, what I'll do is draw it on. So whenever these supply zones are created, right, they're not always going to be mitigated straight away in that current bearish trend, because you can see price pulled up, right? It didn't come up to this one, but what did it react off? It reacted more kind of off these buy to sell wicks down here, right? Some supply in a lower time frame, and then we went down. But these old supply zones, now that we are bullish, what do they become? They become reaction points. So they're not continuation points, because when we are bearish, price can pull back up to them and continue the bearish trend. Whoops. But when we switch bullish and we get that bullish breaker structure to the upside, old fresh supply zones just become points where we can anticipate pullbacks, right? But we don't expect them to have, those full-on trend reversal moves. It's just to initiate a pullback. That supply is then used up, creating the way for the trend to then continue, right? Just think about it as like it mitigates it, it clears the path for that demand to then continue up to the upside, right? So then again, if I drag this across, what do we have? We have the buy before the sell. Price comes up over here, it mitigates it, it initiates a pullback. But that whole time, what is happening? Price is pulling back then into demand, and that's why demand is respected more. So we have this wick here, right? You can see price then comes into that daily zone there, and then we get a break of structure. Now, in this case, the more you refine, remember I said you increase your risk to reward, right? So if we had this origin demand zone down here, where we're looking, that led to this break of structure here, right? We'd be looking for price to potentially come down and mitigate that to form a higher low to then continue, but it ends up not doing that. It just ends up taking, if we don't refine it as much and I draw it to the whole pivot, right, the sell before the buy, we can see that that's what it reacted from. So this is something that you're just going to have to kind of find within what makes most sense to you. You'll get it just with time, experience, and data collection, whether or not you're happy to always draw from the range. And then when you're looking at this in the live market and price pulls back into your daily range, you are aware that we could go lower, we could come down to this single candle, or we could even come down right down to the wicks to try and mitigate these wicks. As long as this low is still held, that's fine. Price could come all the way down to these wicks before we go, and that will increase your risk to reward. But you may potentially miss out on a lot of moves. So the reason, what some of you may want to do is you may want to be a bit more loose with your higher time frame ranges, right? Take the bigger ranges, but then you're happy to then jump down to the lower time frames and just wait for that bullish order flow to start kicking in on the 4 hour and the 15 minute to then get in a little bit earlier. But you accept that could just be a short-term reaction for price to then come lower, and it may actually then want to mitigate the actual candle of the zone, and then we may go, okay? So hopefully that makes sense, but it was just something that you will kind of start to get with time and practice. So we get another break of structure to the upside, and then we start to initiate that pullback. So what is price reacting to? It's starting to react to kind of the apex of the top of the weekly range up here. Now, at first glance, if you were to draw on the daily zone, you have this whole buy to sell. So of course, that would be the most unrefined way of drawing the daily zone. If you to draw it all across, we've already had a bit of a reaction there. We even had a reaction there. We've come up high and filled more orders, but I like to be a little bit more refined than that. So what I would do is refine it all the way up to the last buy before the sell, which you can see price reacted to. But then you may want to be even a bit more accurate, because as you can see, the next candle didn't actually close out below that low, which if you've been super strict, if you've been, I keep saying, if you've been very, very, very strict, technically it should do. This is still valid, the way I've drawn it like that. As you can see, it does work. But if you do it the way where it should be, the next candle should be engulfed, then technically you should evolve the zone to this next bearish candle here, right? Because then that candle closes below. But what did I say, right? When demand, again, if I'm being super, super strict, this is still valid to me. But if you're being super, super strict and you want your demand to be drawn on a bullish candle, then what can you do to understand what's going on in the lower time frames is you can use fractal refinements, and you can see what do we have. We have buy to sell wicks, right? Because price comes down with those wicks, it pulls back up, right? As we can see by the wick, and then the candle comes down. So what is that on a lower time frame? That's pivot created supply. So if you were to draw, get rid of the paintbrush tool, your zone from those daily buy to sell wicks, right? That is the most refined way of how we have then refined that whole buy to sell range down to that fractal refinement. And you can see here, price didn't actually mitigate it there, it just missed it. And that is then what price is then reacting to, is something on the lower time frames where there was that buy to sell pivot. That is what price is then reacting to here. We start to get those changes of character and we start to break to the downside. And then, yeah, this demand zone, ends up initially failing. So if I was to draw on this daily demand zone over here, right, what do we get? We get an initial reaction. We'd expect that higher low to form, but it doesn't end up happening. Supply ends up starting to take control, right? And then we move to the downside, pull back up, and then we get that daily trend change there, right? So there are supply zones up here, which we could see, which when prices then starting to pull back to, we can anticipate to look for shorts. But, as we said before, when you get that first initial trend change, momentum is very high. It's not very likely price is going to want to pull all the way back up. But this supply zone is still valid, right? I haven't drawn it on for price at a later point to come back up. But if we were to, right, this is where price action is now in the live market. If we were to start breaking structure to the upside and then come up to this old supply zone, as long as price is still bullish when we get there, what am I expecting? I'm expecting just a reaction to initiate a pullback. I'm not necessarily expecting that we're then going to go on to form a lower low. Why? Because market structure is king. Not supply and demand zones, but market structure. As long as market structure is bullish at that point, the expectational order flow for me is the blind assumption that we are going to stay bullish, so we're just initiating a pullback. Now, of course, that doesn't mean that you can, start to potentially anticipate ahead of time, like this move up here, that, potentially we are going to get that reversal. Of course you can, but you need to stack a hell of a lot of confidence when you're going to do that and use, zones and all of the concepts that we use across multiple time frames to try and anticipate, right, where that is potentially going to happen. So daily chart is bearish. We can start to look at all those old demand zones to potentially anticipate where that move may start to kick in. So obviously there was this daily range here, right, which you can then refine to the inside bar, right, just like that. And then we draw it across like that. Now, as I said, for me personally, I'm very, very strict kind of with my zones, and at the minute price spikes the bottom of it, if it's a demand zone or the top of it of a supply zone, then for me technically it failed and it didn't work. Now, in this case, it looks like we went straight through and we failed, but this is a bit of an anomaly, this one, because I remember, obviously looking at this in the live market, and actually it shows it that it did that on our charts with the price action candles, that it did move below the zone. But all that is at 10 p.m. GMT, right, when we have those spread hours, when market liquidity is really thin and the spreads blow out. That's essentially what just happened there. This was created at 10 p.m. If you go and look on sort of the lower time frames, it was just because the spreads blew out. And as soon as those spreads narrowed back again, price was trading within that zone. So yeah, don't worry too much if that doesn't make too sense. But essentially, this was just more reflecting the spreads blowing out, and it wasn't really per se price trading below. So I personally view that as this inside bar range holding, and then price actually pushing up a little bit higher, but it doesn't really matter too much there. But we are bearish, right? We're continuing to break lower lows. What do? We then come back up and we react to this fractal wick here, right? It'll be a lot clearer on the lower time frames, more specifically probably the 4-hour time frame, right? And then we continue to move up lower, and what we're reacting to initiate those pullbacks, we're reacting to previous demand zones, right? Because this demand zone was more of the origin, right, that led to that break of structure, that caused that change of character. So when price comes back into it, what do we get? We can start to anticipate that we will get a bit more of a bullish move. Right, nice pivot created demand zone there, and you can even refine that even further to the wick, which will be more than likely a 4-hour zone, but I'm just going to leave that there for now. And then we push up a little bit higher, but we respect the trend, right? Keep that lower high in place. We sweep this minor high, just a bit of sweep of liquidity, but of course we'll talk about that in later lessons. Right, we mitigate that buy to sell there, and then we drop down lower and create more supply, which we have not used yet. And then we get a break of this low. What happens? Price comes into this inside bar here. We've seen a bit of a reaction. It's tried to go lower, and at the moment it looks like it's failing. We haven't quite gone above this high yet, but I would anticipate we're probably going to see that failure of supply. We may get a deeper pullback, potentially up to anywhere within this area here, right, where there may be some daily supply, or because we're starting to now take these highs, potentially that could just be, price starting to then move higher, and for price to go up higher from there. Because what have we done? We've filled up more orders within this daily zone here, right? Because that's a massive daily zone. Anywhere within this wick, all of that demand's going to be in there. We never know, how much is going to be left within the zone. But of course, the further price pushes towards that EQ, generally the more it will be mitigated. So here, it just reacted from the edge, just reacted from what we call the distal, but there's still more orders within the zone. As we can see, prices come lower to mitigate those to potentially now try and cause that daily trend change. So from a daily chart perspective, appreciate it looks a little bit messy when you start to draw on all of your zones. But yeah, that's what happens when you're kind of testing and just going over price action. When we are in the live market, we are not going to have our charts looking like this when we have every single zone drawn on. Generally, what you want to do is just focus on what is price reacting from now, what are the fresh and mitigated zones that it could come up to, and just use whatever is going to help you to build that story. But yeah, you don't really want your charts looking like this in the live market because it can get a little bit confusing, especially when we're jumping through all the time frames, and we want to be able to focus on true price action. But let's come down to the 4-hour chart and see what we can do down there. So you may have already noticed that my weekly zones have now disappeared, right? All I can see is the daily zones that I've drawn on, and that's just because for me personally, I try and keep it as clean as possible, and I have my weekly zone setting. So if we jump back up and I click on one of these weekly zones, right, I have it so it only shows on days and weeks, just because I want to try and keep my charts as neat as possible. So yeah, let's hop down to the 4-hour chart. I'm not going to go through all of the price action, right, because this will be a 4-hour video and I don't want you guys falling asleep. So let's just concentrate on some of the more of the price action that we've really been concentrating in the lessons so far. So right, we came down towards this weekly low. We know we have that daily area of demand that we're expecting price to react from, and then what do we get on the 4-hour chart? We start to see those 4-hour changes of character, right, where we take that minor low, so draw a bit more accurately, we take the low, so then we take the high, and we get that 4-hour change of character, which is generally that 15-minute bullish trend change. And then what happens, we create this very, very minor, right, it's not a strong demand zone at all, but you can draw on that last sell before the buy that caused that 4-hour change of character, right, and price comes down in to mitigate that, gives us that another minor break of structure, right, and then we come back in this case we end up mitigating this wick here, right. Demand is then holding, and then eventually it leads to supply failing and price pushing up higher. So you can see if you just draw on all of these zones, the way that price will literally react from them, but it's market structure that is telling you, whether that zone is going to hold or not, or whether demand is in control or we're going. But what I want to just do quickly is jump down to the 15-minute chart, and we can start to see, what's going on down here on the 4-hour chart. At the same time, if we are anticipating what? If we're anticipating trying to catch this weekly high-low, right, the weekly's pulled back in a bullish trend into the discount, into the demand, the extreme demand that led to the weekly break of structure. What do we have on a, whoops, this should be my daily chart, so I was getting confused there. Right, so then this is the daily area that we're looking at, right? Let me drag this back across. Prices then come down into that daily wick, right, that fractal refinement, pretty much the extreme that also led to that weekly move within the weekly zone. So we're anticipating now that potentially we want to try and catch the weekly high-low. So if we look at the 4-hour chart, if I sync this up, this is what we're just looking at. So the 4-hour chart has now come into that daily zone, and what do we get? We got a 4-hour change of character, and that created a sell before the buy. Remember, it's not a super strong zone because all it led to was a break of minor structure, right? Very, very minor structure in this case. But it's useful when you're trading, right? Because this represents more what's going on in the lower time frame. So let's zoom into the 15-minute chart and see what all of that represents. All right, we've covered this a few times before in the market structure lessons, right? And now this is where we can see, what did we get? The 15-minute chart was clearly bearish, right? Creating that lower high, which then led to the lower low. And then we took the low and we took the high. So we got that 15-minute change of character, anticipating that the 15-minute chart is going to pull back, but then it ended up leading to the 4-hour change of character. Let me zoom right in so you guys can see this, which is where I've drawn the orange line. So that 4-hour change of character denoted by the dotted line there, which you can see is that bit there on the 4-hour chart, right? We get that initiation up. It creates that 4-hour POI, that 4-hour demand zone. It's a weak 4-hour demand zone, right? Just because it's a level zone, but we're pairing this with everything on the higher time frames, and that's why it becomes an area of interest for us to potentially start framing trade ideas to anticipate that big weekly move. So what happens, we get this big trend change on the M15 chart, we create that M15 demand zone right at the extreme. All right, so we take that pivot supply zone with those two candles, sorry, pivot demand zone I should say, definitely not supply, right? And then price comes down and it mitigates this blue zone, the M15 zone, and then we have literally, if you set your limit order there, caught the bottom of this weekly move. Let's see with how many pips. So in this case, stop on the distal, stop just below the low. Let's be conservative. Do you know what? Let's be even more conservative. Let's say 10 pips because we want to cover the true swing low. And then you have caught that move from all the way down here. So you've literally caught that exact weekly bottom, and then it peaked at what, 500. Let's say 567 pips with a 10 pip stop, so that's over 56R, right? And you could have just Obviously, it wouldn't be easy in reality with psychology and whatnot you have to deal with and patience, but that's in theory is how you can catch and time that weekly move, right? And you're not jumping on every little M15 change of character. No, you're waiting for the M15 to truly switch trend, to get that bullish break of structure, to get that 4-hour change of character within the daily extreme zone, within the fractal refinement wick, within the weekly zone, right at the extreme origin of the weekly move, and then you wait for price to come back in, and then you've got that weekly demand zone right at the origin there. Now, this is another case where if you had refined your zone to just a candle, you wouldn't have got in, okay? Which is fine, that's absolutely fine. You'll see loads of times as well when price does mitigate this, it will just come with time and testing. But perhaps you don't want to enter on a 15-minute chart, and you want a little bit more confirmation, then what you can do, and this kind of reflects more my current style of trading, is I won't over refine the M15. What I'll happily do is I'll draw the whole range, I'll draw that whole pivot, and I'll start to be aware, I'll set my alert on the edge of the zone, and as soon as price taps in that zone, I then drop down to the lower time frames, and I start to look for my entry models down there, right? Like we just went through before on a theory video just before this video, where I showed you the M15 pulls back to form that high low, and we jump down to the M1, and we start looking for, the same thing on the M1, right? So in this case, I can't go down to the M1 just because of how far back this is. The price data won't load on the M1 chart, but you can see here what happened, right? We took that M15 low, then we took the high, so we had that change of character, and then literally straight away, right? You don't always have to wait for price to come back at a later date, but straight away, that sell before the buy creates demand, right? When this bullish candle here closes above it, and then what happens in the next 15 minutes? Price taps into that demand that was just created, and then we're off. Right, so sometimes it's really quick, and we'll be looking at this potentially on the M1, or you don't have to. Again, you could just wait for that extra confirmation, right? Prices come into here, we've got the change of character, we've created another area of M15 demand. Boom, I'm going to set my entry order there. Again, we'll cover entries and stuff in a much later date, but I just think it's useful to kind of get your brain thinking and just show you the true potential of how you're using all of these concepts. You don't even have to go lower than M15 to get insane risk to reward. Okay. And it's a very, very sort of more hands-off approach. You don't have to be playing around on the M1 timeframes, okay? But yeah, just kind of wanted to show you that how that weekly starts to change, but we can all see it all starts first on those lower timeframes down there. So we won't go too much further into this, but we'll go through the 4-hour chart a bit more and take a look at some of the examples that we should be quite familiar with when we were marking our 4-hour swing structure. So this dotted line, of course, is that daily change of character. It's that 4-hour bullish trend change. So what do we know about all of those fresh, unmitigated 4-hour supply zones from previous price action? What do they become? They become areas for us to anticipate where 4-hour pullbacks may be about to kick in. So you can see here, if you refine it to that one candle, right, it's a bearish candle within supply, but technically it should be into the bullish candle, or you want to take that whole range, right? You want to take the whole sell before the buy. You can start to see how it initiates those pullbacks, right? Or potentially you want to refine it to that wick, right? And you can see that would have been a bullish pivot where the true momentum steps in on the lower time frame, and that is what initiates that pullback. But because we are bullish, what does that mean? It means demand is going to be in control. So let me just grab this a little bit quicker, right? Our price action is a little bit messy in this area, but we can see this whole time demand is keeping control. We start to get substructure breaks to the upside, and even within those substructure breaks, you can see what's happening. I'll just draw it on rather than put the boxes just to save time here, but we get that pivot created demand, right? Price comes into it, fills up those orders. We get pivot created demand, price comes into it, and it fills those orders. So you can see that whole time that yes, there's some supply within here, right? Price pulls back up into that supply zone and it tries to push lower, but ultimately we're in the bullish trend. So demand zone is staying in control. We move away, create more demand, right? In control, move away, we create more demand, we're in control, and then we get another bullish break of structure to the upside. So then that old supply over here, right? It's just a reaction point for price to react off. So we have this buy before the sell. That is valid to draw it that way. For me personally, it doesn't make sense because after it was created, price spiked up through it and took the orders. So for me, those wicks show where the true supply is because price went up and then sold off, and it's that pivot that I personally am interested in. So I refine it to that wick there, and that for me is the fractal refinement, and that is where price tries to pull back as it fills up those orders. But what happens? Price, demand stays in control. We start to move up higher. Don't quite make it, come down, we sweep liquidity, and then that's enough to fuel the move to get that true next break of structure, and then the daily switches bullish, and we come up into this daily area of supply where we can start to refine that daily down to 4-hour areas of supply, right? And this is how you can play it on, so on and so forth, right? So we have the whole range like that, or you can refine it to the inside bar, right? And we can see we get a bit of a reaction, but price spikes up literally just a little bit higher. So for me, that's invalidated, and what I would say was the true supply zone that caused that pullback was this big sell before the buy there, and that's what initiated that pullback there. So then at that point, I would be looking for price to come down towards this 4-hour demand zone, or even if you took this the actual pivot of the two candles, right? But we can see, actually, let's see if it comes down later. So if I draw that on there, down to the low of that candle, so we take the whole pivot. Actually, no, price, yeah, price does miss out at that point, but we just react to the daily zone, right? So this is why you have to use multiple time frames to really see what's going on. Otherwise, sometimes you may miss moves, because if you're saying I'm not going to get long until this 4-hour zone is hit, or even just the single candle, but you're then not, looking at, well, actually we've reacted to the daily range. What have we then got? We've got a 4-hour change of character. We've got a 4-hour bullish trend change. You're going to miss out on all of that, okay? Yeah, so on and so forth, really. It's the same thing again and again and again. We break another break of structure, daily break of structure as well. You can see we then mitigated an old daily area of supply. And what happens, price comes down into this 4-hour decisional demand zone there, right? We then get that change of character to the upside. We pull back in intraday. I can pretty much guarantee you there will be a 15-minute or 5-minute area of demand. We then can get in long, and then we can target that weak high there to anticipate the higher high. Where do we know that pullback's likely to kick in? When we mitigate an old area of supply, which you can see we drew on earlier, right? That daily area of supply, we mitigate that. Then we do have areas of demand, right? That would be a decisional area of demand, right? That's sell before the buy. And what happens? Well, you can see we got a reaction. Price came down. That big wick means price moved up, right? It tried to go up higher, but it ultimately failed. So why is demand starting to fail? Well, because we've come up into an area of daily supply. So that's starting to overpower 4-hour demand, right? And then that leads to what? A 4-hour trend change, which is the daily change of character. So then what happens when we get that bearish trend change? Well, we can anticipate that now supply is in control. So what do we draw on? The buy before the sell at the extreme. Price comes up into that supply zone. Then what do we get? We get that 4-hour change of character, right? It switches in bearish. And then we can start to look at those internal areas of supply. Yes, they didn't cause swing structure breaks, but they caused minor breaks of structure to the downside, right? It took out that minor low. You can even refine it to that candle there, right? Price pulls back up in. Boom, we've got all the confirmation that we need now to, at a minimum, target this weak 4-hour low, right? Supply is clearly in control, and then we move down and take out that low. We come into that area of daily demand, because at this time, the daily is still bullish, right? I'll show you 2 time frames at once would probably be useful, wouldn't it? So this whole section of 4-hour price action here, as you can see, is this daily section of price action here. So at this point, the daily chart is still bullish, right? We had that higher high, and we're just anticipating that we're going to get that daily higher low, and we're going to continue that move. We're going to continue that weekly move, right? But that doesn't mean that we can't trade the 4-hour and intraday price action short down into these regions until the 4-hour switches bullish again. And this is how we can do that, right? We can see the 4-hour being bearish within here. And again, we get that break of structure. We then mitigate this area of daily demand. We then get that change of character to the upside. And we can see demand in control, right? But then what happens? If I zoom in a little bit, we have another 4-hour area of supply, right? Make sure you include the wick as well. We drag it across. Price comes into that area, spikes it. We get a change of character to the downside. Supply starts to fail, that internal supply. We get that change of character. Price then pulls back up into this, right, the buy before the sell. So we're then mitigating that demand. Yes, it's a little bit messy, but this is how you can clear it all up on the lower time frames as well. But it's just so you can see what's happening. We pull up into that supply zone. Supply is now filled. Demand's all being cleared out, right, with these wicks here. It's filled all of the demand in with there. So now when it's mitigated the supply and all of those sellers step in, what happens? Pretty much apart from this demand down here, which we can see we do get a bit of a reaction from, but not enough, because supply is completely in control now, and we smash straight through. We mitigate some more orders, right, within that daily zone. We can refine that to the 4-hour candles within here to initiate another pullback, but ultimately we get that change of character again, right, change of character there. We then pull back up into that newly created supply, right, within that buy before the sell, and then again, all the demand within this wick has been cleared out by this wick here. So then when we mitigate supply up here, we're then ready to tank straight down through. So I'm just going to get rid of those messy orange lines. In fact, we'll just leave that there, just so we can have the 4-hour zones drawn on. Okay, and then yeah, we go on further and further and further. We have a very, very aggressive sell-off here, and then we come down and mitigate those old areas of demand, push a little bit lower, and we start to get those pullbacks. Yeah, so on and so forth. Let's try and just look at a few more interesting areas of price action, because I think you guys are probably hopefully starting to get the hang of things now, right? We come down into this daily extreme, the old extreme that initiated that weekly high low. But if you remember from a market structure standpoint, what did we expect when the weekly mitigated this area of demand? We expected the weekly chart to form that higher high. Now, the minute it starts to come down with a lot of momentum, the daily is bearish. We can anticipate with a pretty strong, and high degree of accuracy and high degree of probability that this weekly low is a weak low because it failed to do its job. It failed to take out the high. So when we start to come down, the daily is bearish with a lot of momentum. We can expect purely from a market structure standpoint that this low is likely to get run, which is what ended up happening, okay? Now, that whole time when that's about to happen, you could have drawn on your charts, right, this weekly candle as just a pivot demand zone, right? And that's more than valid to do. But remember, it's just a demand zone. It is not a strong zone, right? Because it did not do its job. It did not cause a break of structure. It didn't even really cause a minor break of structure from this high here, right? Because it never had a candle closure above it. Okay, now the reason why some of you may want to draw this on, because you may be thinking, why would I bother to draw on a weak zone on a low that we expect to get taken? Well, the reason why is because it's a weekly zone, and like I said, even if it's a weak zone, I know it's really confusing because weak and weekly sound the same, so especially if English is not your first language, but the reason why I would personally still draw this on, even though I'm expecting price to ultimately go through it, is because nearly every zone will have some form of a reaction, as we can see here, right? We had that bullish reaction with this candle on the week of the 26th of July, and how big was that? Let's have a quick look. That was a 160 pip move. But from an intraday standpoint, right, that's what happened here. This is this entire move, which we can take advantage of, and we can trade, and we can make a hell of a lot of percentage and money, and are doing that. So that's why we draw it on. But I'm always managing my expectation that this move is very likely to be short-lived. It's likely to just be a daily pullback, running some of this trendline liquidity for price to then come down lower, right, and ultimately take out that low. Right, so that's why I would personally draw it on, but I am aware in the back of my mind the difference between this weekly zone here, which is a strong zone that led to a break of structure, compared to this just being a pivot zone, which I expect a very short-term bullish bounce from, just a bit of a reaction point, okay? So I did just kind of want to cover that. But yeah, this whole zone is still valid, right? There can still be orders even down into around this wick that price ultimately may want to come down to before potentially that weekly high low goes, and we could go to the upside, or of course we could be switching bearish now and we could start a new trend. No idea. Don't need to know to make money, and this is that whole point, right? We just trade what we see, and we run with blind assumptions until we're told by the market otherwise. But what I'm gonna do is I'll just leave that on, that's fine. So let's just investigate some of this price action area, and then we'll start to wrap it up. So remember when we we're going over this on the 4-hour chart and even the multi-time frame analysis, right? When price was starting to get a bit more corrective, what was happening? Price was pulling back up into supply, taking the low. Then we were getting pullbacks, right? We pull back up into this range created supply, right? It doesn't quite come back up into the refined one, but then we start to get that change of character, and then we sell off. So let me make this kind of point again. Did try to make it earlier, but just to make sure, kind of drive this home. The difference between when you want to refine and when you don't, right? So we have this, obviously this range created supply on the 4-hour chart. Why is it range created supply? Well, because it's the buy, right? That buying range before the sell that led to the break of structure. So that whole area is valid 4-hour demand, strong 4 hours, sorry. That whole area is valid supply, right? It's a strong area of supply because it led to a break of structure, but you can refine it, right, to that last candle that was then engulfed, and that would be more than valid as well. But sometimes price is going to miss you and it's going to go, and that's more than fine. But what you can do is just take the whole range and then look for those lower time frame confirmations and wait for price to start to break structure to the downside, which is what ends up happening here, right? We break that structure to the downside and we take that low there, and then we start to go. And what you can actually see now is that in reality, price was reacting from this sell to buy wicks, right, within here, and it starts to go, which would be probably more than, let's investigate that on the 15-minute chart actually. Let's see if we can see it. It might be low on the 15-minute chart, but let's go back to, where was that? The 14th of July. So around this area here, yeah, I mean, before I even zoom in, you can see that's clearly on the 15-minute chart where a load of supply stepped in, right? And what was that? Well, if we draw on the 15-minute chart, it was a super clean M15 bullish candle, right, before the sell, where the hell of a lot of momentum came in, and that's what price came up to mitigate, right? So if you're kind of thinking there, and you're kind of new to supply and demand, and you're thinking, how am I going to see all these little fractal refinements and know which one's going to react to, or do I take the whole range, or do I take that last candle, or do I take just the wick of that candle? Don't panic, right? It'll be fine. I promise you, this will become so much easier with time and experience. But what will happen is we're just understanding what's going on here. So we understand what those buy to sell wicks mean on the lower time frame, but we don't have to have perfect guesses that that's where price is going to reverse from, because we're always going to be constantly using multi-time frames to help us refine this 4-hour zone into, 3 or 4 potential M15 zones within that whole zone, right? So this big grey box here is that 4 hours range I've just been spoken about. And then what we can do is we can leave it there, and then we can go, okay, well, I'm going to jump down to lower time frames, and I'm going to refine that 4 hour zone to a few more points that look good on the M15, right? And I go, okay, I've got these kind of 3 points that I'd be interested in. Obviously, I always would love to be trading from the extreme, because that's going to give me, generally the highest strike rate and risk reward, because if this zone fails, well, then I'm wrong anyway, because price is most likely switching bullish on the 4 hour chart, right? But now what we've done is we've taken that whole 4 hour range, that whole buy to sell range, right? We've now refined that down to 3 M15 zones. Now, which M15 zone is going to hold? I have no idea, but I don't need to know, because I can just trade all 3 of them when price comes into there, and I can wait for price to confirm what I need to see with my entry models on the lower time frames as price comes into there, right? So on the lower time frame, we would have seen a breaker structure to the downside here, or pull back up into an M1 supply zone, and then we can take that short, and then we're in the move, okay? But yes, price easily could have had a short-term move, reacted from demand from here, but we can remove risk, we can pay ourselves a bit, we can take partial profits, and we can even look to get long here, and take the hedge and trade up higher to our next zone. And then we just look for the same thing to happen again and again. It may be short-lived, it may react from demand, and it may come up higher, finally react from the extreme, and then we go. And we have no idea, but we just continue to be neutral, identify high probability areas of where we expect lower highs or higher lows to form. We wait for our entry models, we wait for confirmation, we enter, we manage our risk, right, accordingly, and then we pay ourselves along the way, and we just keep doing it again and again and again. And this is kind of what I mean by no one knows where the market will go, and you don't need to know to make money. You just identify high probability areas, you try and get on the right side of the market as much as possible by using market structure. You then use multi-time frame analysis, supply and demand zones, right, premium and discount, just to help increase the probability and how far you can push those moves as much as possible, okay? Now again, charts are starting to look very, very messy, and we haven't even drawn on that many zones. There's a lot of zones I haven't drawn on, and I haven't put all the lower time frame stuff on. But yeah, don't worry. In the live market, we will have our charts as clean as possible. But this is just a really good exercise, to see, how the charts start to play out. Now, I won't do any more just because I don't want this video to go on for hours. We're going to get a lot more practice with this as we go through the next lessons, as we apply more and more concepts, but also, of course, with the weekly. The live market stuff week in, week out, as we cover the live price action as it forms. You'll just see it, in real practice as we go through this, and you'll see it play out again and again and again, and you'll just start to get really familiar with this. So yeah, this is now your time to do the work. Jump on your charts. Hopefully you still got this layout saved down, and just start to take, just take one time frame at a time. Literally just a weekly chart. Just look at it. Look at all the big zones that it reacts to. Look at the ones that fail. Then I would recommend that you just kind of take one sort of area on the weekly chart, like this big range here, and then you can draw down into the lower time frames, draw on all your daily zones, right? See which ones work, see which ones don't, and then refine those daily zones on the 4 hour chart. You can draw all the other ones on, right? So on and so forth, and then. This is kind of how you'll really start to get to grips with it, is if you go and look at the true turning points, so all of the swing points, right, on the 4 hour chart or whatever time frame, then just jump down into there and investigate that on the lower time frame, investigate it on the 15-minute chart of how could I have anticipated that turning, right, and how could I have got in. So let's look at this move up here, right, where we got that break of structure. Where were we? Up here. All right, and go, well, how could I have anticipated that on the 15-minute chart? Well, that dotted line, that 4 hour change of character, was what? It was a 15-minute break of structure, that 15-minute bearish trend change. So then that whole time, now the 15-minute is playing within what? This bearish range. So how can we anticipate where to catch that 15-minute lower high? And then you start to draw on all of your supply zones, right? There's always, not always, but a lot of times there's going to be multiple, and you'll see which ones are going to hold and which ones aren't. So what do we have? Let's actually just look at this, and then we'll kind of wrap it up there. Right, so we have this decisional. Now decisionals can play out. They're not always the best because they're not always well priced, but they can get a tradable reaction, and then it can clear supply for price to then pull up a little bit higher. And then what do we have? We have this buy before the sell here that we can also look to potentially take a short from, which we can see price initially has a reaction to, but then it pushes up deeper to catch more orders. So what you may want to do, right, instead of having that large zone, is refine it to just a wick, and that will be likely a 5-minute or a 1-minute zone. And then you've got a fractal refinement even more. Then supply has been filled. Demand starts to have reactions but fail, and supply is in control, and it comes down, right, but it fails to take out that low, but we then get another reaction from what? This 15-minute supply zone there, fails to take out the low. So now what do we have? Well, we are within this bearish 15-minute range, right? That's the high, that is the low. We've tried to react from supply, but we failed. We've come up higher. We've tried to react from supply, we've failed. We've come up higher, but this supply here does hold. We tried to go lower again, but we failed. So what does that mean? It means these are weak highs, right? So we can clear this up a little bit now. Let's put the range that we're playing within. Now, we get that break of structure. So then what happens? This becomes our, what? It becomes our 15-minute high, right? That would be our 15-minute high that we'd need to see hold. Price tries to come up higher. It fails to close above it. So that means we remain bearish. We get a grab of liquidity and we go. And what did price react from? Well, this is where you could have had this whole unmitigated buy before the sell, right? Or you could refine to the doji, but it would ultimately actually reacted from, because it just misses that, was what? It was these buy before the sell wicks here that price reacted to. Now again, you're going to think, well, which one do I draw my zone from? How am I going to know if it's going to be the whole range, or if it's just going to be this wick up here, or this buy to sell wicks here? Right, because there's going to be zones all over the place. But again, you don't always need to know, because if you're looking and you just know that this general area is where you're expecting potentially a lower high to form, you can then sit on the lower time frames and wait for the lower time frames to start to switch bearish, right? And then you can look for your entry models within there, right? Which we'll cover at a later date. And that's why, you don't have to always know, but it's more that when you see price violent react and you see price start to break structure on the lower time frames, and you see demand start to take control on the lower time frames, supply starting to fail, you can then look left and you can understand why price is doing that. It has mitigated something significant, right? It's not just reacting to thin air, and it can then give you a lot more confidence that that stuff you're seeing on the lower time frame isn't giving you false signals, and this is a strong lower high to want to trade, and then that can increase your probability. Now, of course, there are other things that we can do to anticipate ahead of time which zones are going to be higher probability, because in this case, this buy to sell wicks was actually a demand, a supply to demand flip, which we'll cover at a later date. I don't really worry about that too much just now, but there are things that we can do, right, that will help us ahead of time to anticipate that. But yeah, I do just really want to drive the point home now is we will never truly know which zone is going to cause the move, to cause the next swing run, but we can outline them ahead of time, and then we can start to rank them in the back of our heads. Well, which ones are the highest probability? Because back here when price breaks that low, and then we've got 1, 2, 3, potentially up in this wick, and then you can refine all those zones to even smaller ways. You kind of end up with 5, 6 possible combinations of where price may react. It doesn't matter which is the one that ultimately goes, because look how many trading opportunities we get this entire time, right? We can start to trade, these demand zones here, short little quick moves. We can play ping pong. We don't have to do that, but we can do intraday if we want. We can start playing the ranges. But again, imagine this is the monthly chart, right, or the weekly chart. These are going to be big moves we can take advantage of. It's just having an understanding that although this is this is right here, this is an M15 demand zone, and that's why you often see a reaction to the upside. Because you understand market structure, because you understand that although it took this high out, all that high is a substructure high, right? Because price had a clean move down and it pulled back and then it took out that substructure high. So it didn't take a lot of money to take out a high like that. That is not a significant high, right? So when price comes back in, yes, there's a reaction, but ultimately supply is now in control, right? We're getting those series of mitigations and we are coming to the downside, right? Now, in this case, price then does push back up, but supply is in control again. And then old areas of demand here, right? Demand there, small time reaction. We come back down, right? So on and so forth. And then we have old areas of supply. Yeah, anyway, I'm beating this to death a little bit. I want to leave that there now before this goes on a little bit too long. But yeah, hopefully you guys have started to take some value from that. Play around with it. Yeah, start to draw your zones on there. If you're getting a little bit overwhelmed, just keep it simple again. Just go back up to the weekly time frame. Just concentrate on the big swing points of the market, right? Don't even worry too much about the decisionals and everything in the middle. Concentrate on those big swings initially. The real obvious ones on the daily chart. And then, even if you literally just had this daily zone drawn down here within the weekly chart, then go down to the 4-hour chart and just anticipate how you could use the 4-hour, the 15, maybe even lower, to anticipate all of those big daily swings, right? Yes, we can trade all this in the middle and you will learn how to do that, but it's a lot more advanced, it's a lot more messy. What I would advise now, and my best advice would be, is just go down to all of these big swing points, right, where all your big circles are, and just concentrate on those. Because those are the highest probability areas for us to be looking to position ourselves, because they're going to give us the highest risk to reward positions, rather than trying to trade the mess in the middle. You will learn how to do that if you wish to do so, but those big swing points are really where that big professional, high risk to reward, high strike rate trading is going to occur. So I'll leave that there before I talk any longer. See how you get on. As always, post charts in the community if you want any feedback. And just make sure you enjoy it. All right.